Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is July 8th, 2024. And we're going to talk about Bitcoin today on some higher term timeframes. But first, we're going to follow up with where we left off on Friday's video. Now, on Friday, I had mentioned, Bitcoin closed back inside the 56.5. So there was a few things that I was looking out for. And one of the scenarios, well, both scenarios technically played out pretty darn perfectly. I was looking for the potential, as long as Bitcoin was closing, 4, 6, and 12-hour candles above the 56,500 level, for it to head up and test overhead this resistance here, which was the wick low, or the prior lower low of the move that was coming in just before the current lows. Coming in at around 58,400, we did see a nice tag of that area, and a closing low was set. Now, this would be a closing low on bullish divergence between this low up here and this low right here. Now, we saw this actually get blunted pretty quickly coming into Sunday, but we did get a valid regular drive of bullish divergence there and the potential to start building more bullish divergence here within this current downside move. Now, in this case, the other scenario that I mentioned is that if Bitcoin did happen to close a daily below, or even a 4 or 6 hour time frame, even a 12-hour below 56.5, that we were likely going to see Bitcoin run its current low and possibly lower. Well, this scenario thus far has played out. We saw that Sunday's candle closed below 56,500. Monday's candle followed through. This is a 4-hour time frame. I'm going to show you that it ran the actual 4-hour close on a low here in just a moment. But essentially, that scenario has played out now. So we got the close below 56.5. It ran the actual low wick here. And while Bitcoin is still hovering around the edge of the danger zone right here, which was the low wick of the range here at 56,500, if it does drop it again on any significant time frame, this entire low side structure of the move is still in play and lower down into target one, maybe even around the trend line here again. Now, this trend line is just connecting the two prior lower lows of the range and then extending the trend line to the right. And you can see that it perfectly tagged that on that Friday candle wick down. So this, Bitcoin is not out of the woods right now, but it has played out both of the scenarios that I laid out in Friday's video. Close above 56.5, likely going to run this resistance if it get at 58.4. If it gets above even 58.4, then I'm looking for a recovery of 60,300. Now, prior to this, on Friday's video, the lower high on this move was at 63,800. And what I wanted to see, and what I still want to see, is 60,300 reclaimed, but I wanted to see 60,300 reclaimed to give the bulls an opportunity to potentially break the downtrend here on this wick high at 63,800 on any kind of a daily closure above there. Well, that picture has changed. This is still a high, and it's a closing high that needs to be broken, but it's now the closing high on the 2 and 3 day chart. So to break the 2 and 3 day downtrend, this is going to be the lower high that needs to be broken and closed above on those specific time frames, that being the 2 and 3 day, to actually break the 2 and 3 day downtrend. But the daily is now a little bit more forgiving. Where is the last lower high? Well, we had this low set, and then we had immediately a lower high from Saturday into Sunday's candle. So this is a valid closing lower high, closed lower than the actual close opens down here on this low. So this is a lower high, whereas the wick high, it's coming in roughly 58,481. So I would say that for the bulls to break the downtrend, they need to recover 58.4 and then recover this 58,500 basically. Above 58,500, the daily downtrend is broken. We don't have an uptrend, but that would be a break of the daily downtrend. And that's where we can start looking for higher low structure on a closing basis. Right now, if Bitcoin were to, rise up, over Tuesday and into Wednesday and breach above that zone there at 58,500, it would break the downtrend. It would have a swing higher low in place, but we would need to see a subsequent higher low close. So that would be the criteria right now to look for on the dailies. Closes above 58, 4 to 500. We're looking at that daily downtrend being broken. We have a swing higher low structure in place. We just need to see a closing higher low. From there, what would I want to see for the bulls? That would be a recovery of this prior support zone here at this low side structure at 60,300. And then above there, try to make a run for the 2-day and 3-day now. Previously, the daily lower high, but now just the 2-day and 3 days most recent lower high to break the downtrend on those time frames. So that's what I'd be looking for the bulls. If they do happen to lose 56,500 in some medium-term timeframes, 4, 6, 12-hour, I would look for this low side structure to be tested. It's fair game, right back to these current lows, the wick low, and possibly lower down to the trend line here at 53,000 to possibly this big target one of distribution zone, especially if we start seeing any daily closes below 53.5, this wick low. Then I am looking for daily distribution into this zone about 50 to 53,000 right here, where Bitcoin revisited some prior cycle resistances from 2021 and 2022. We had 50 to 53 were weekly highs, and Bitcoin revisited that area back in February, found it as resistance, found it as support, and then on to new all-time highs. So relevant zone from 2021 and from this year as well, back in February. So that would be the next big area to look at. And then, of course, the next area, should $50,000 break down, that I would be identifying is that monthly that I talked about on Monday, Wednesday, and Friday of last week at around 48,240 to 45.5. This is the bear market monthly lower high from 2022. This is what kicked off the actual bear market, was that lower high being put in on the monthly. I don't need to really show it again today, I guess. I might get to it. We'll see. But essentially, this is that wick high from the lower high in the monthly in 2022 that kicked off the bear market at 48,240 down to the closing structure high at 45.5. You'll generally hear me refer to this in Spaces events and other events as give it some room, somewhere around $45,000 to $48,000 if Bitcoin does start to break down from $50,000, should that scenario play out. Right now, bulls have a chance. If they can close back inside 56,500, on significant time frames, and continue to close 12-hour candles in here, then I would be looking right back to this daily lower high now, the new daily lower high at 58.5 or so. And then if they can close above there, we can start looking at that as a trend break, and then look for higher low, equal low structure. Even if we do see a trend break, I do want to keep you informed of this particular fact. If you see a trend break, it's not implicit that we're going to get, higher low structure or even equal low structure, but that would be the next logical thing to look for, would be if it, breaks that structure, then we're in, higher high structure at that point. You got lower high, you break to a higher high, you look for lower, higher lows, equal lows. Could it just come right back down and bust through the lows there? Yes, that would be a deviation of trend in that case. But let's drop down to the 4-hour, because I do think this is relevant, even though it's a macro video. This pretty much played out exactly what I was talking about on Friday's video, and that is, we had the close back into 50 on the daily above 56,500 from Friday into the Saturday candle, thus preserving the opportunity to test that 58.4. Of course, it got up there almost 58.5. And then upon losing, you see it came down to 56,500. Once it lost it, what did I mention? It's probably going to run the lows. Possibly that opens the door for lower. And in this case, it ran the close open low here on the 4-hour chart. So this is a bit of a reversal setup, but again, for the 4-hour to get continuation to the upside at this point, it needs to actually close above that 58,500 or so, to then test up to the next zone that we talked about on the daily at 60,300. So just be aware of that. Big zones between this yellow zone and the danger zone here in red. Starts closing below. We're looking for the lows to get ran and possibly lower. Pretty easy to identify what's going on there. Now let's go back to the daily here. We can get rid of that example there. One of the reasons why I bring up that, things played out essentially what we had discussed on Friday is because, From here, we're getting into some critical time frames on the higher term time frames that we're going to look at that, you need to be aware of what the structure is and how things might play out given where price closes on especially dailies, because that's going to lead into these higher term time frames. Now, in this case, on the daily, I do want to check up on a few other things. One, we do have the potential for any other lows getting set to throw a bullish divergence as long as it is not getting down, basically closing below the current low side structure. I do believe that it will preserve the bullish divergence on RSI from this structure over here in trend. So that would give you some regular bullish divergence. I do want to call out that today, the Tuesday candle, even though I'm recording this on Monday, this is the Tuesday candle. If the Tuesday candle closes above 54,500, we will get a momentum shift back to the upside. So we would see pressure on to the upside. That would only be an initial cross. We'd need to see Wednesday close above the updated pivot as well. I will update you in the various Discord servers that I am in doing TA. So just check in some of those channels, whether it's the Landy's Corner or Landy's Calls or whatever the channel might be named. I will post the updated pivot because I'm not going to have a video on Tuesday. I will only have one on Wednesday and Friday later this week. So now this is going to be important to watch that the 58.4 to 5 area to the upside. And then of course the pivot on the daily for momentum being around that 54,500 closes above there, keep the pressure on to the upside. So, obviously closing above 56,500 would be above there and preserving the opportunity to try to break the downtrend on the daily. Let's move on to some of the 2-day chart here. We saw that the 2-day has actually not closed below the 56,500 thus far. So that's actually a positive thing for the bulls here. I'm going to show you that it's not so positive on the weekly, but at least in the shorter term timeframes and intermediate between the weekly and the daily here, the 2-day did not actually breach below here. So you want to see this next 2-day candle get above, of course, what would be a downtrend break for the daily above 58.5, and then go and recover 60,300, take out the last lower high on the 2-day chart at that 63.8. So that's the next thing to look for. Any 2-day closure below 56.5, it's going to be pointed down to the distribution area, basically. Likely riding the trend line down. Bitcoin's playing very, very, very nice lately with the technical levels. So it's been bang on. Like, you might think that me calling out some of these areas is magic, but it's really just a testament to how technical Bitcoin is playing right now. It's it speaks to a maturing asset, and I think it's a beautiful thing. 3-day. We don't have any closures coming up here. We did get the closure below 56,500, thus preserving the opportunity from the 3-day chart as long as it's not setting a low, meaning to set a low on the 3-day, it needs to close above what would be a downtrend break on the daily. So in the next 2-day candle, which will also be the 3-day close, we need to see it closing above 58,500 basically. That would set a swing low and a closing low, thus pointing a little bit further back to the upside versus it closes anywhere below 58.4. It's likely that Bitcoin's going to head down from the within the context of the 3-day candle structure. In this case, there's some time for the bulls to try and recover that 58,500. I do want to call out that Bitcoin has now entered the oversold zone ever so slightly here on the 3-day stochastic momentum chart. And what do you know? The pivot to set the actual low or to cross stochastic back to the upside rather is the same pivot that would be setting a 3-day low structure on a closing basis, and it's 58,550. It's a little bit above, but 58.5 would do it in my opinion, because the close open would change that number, which means the open would likely be above this pivot, because the pivot will dive if Bitcoin closes above 58.5. We'll see the next updated pivot number be basically around where the current lows are when this indicator updates after the next close. Of course, we will investigate this coming in to Wednesday because we should see the close. Yeah, one day. So the Tuesday candle, we will talk about this actually on Wednesday. So good. We'll check up on this on Wednesday's video. So you want to see it closing above 58, 500 basically. To set that low, that would turn the momentum back to the upside, at least on an initial basis. We would need to see follow through in the next 3-day time frame, closing above its updated pivot from there. And of course, we'll check on that on Wednesday. Now, to get into the big stuff, we're going to see a Thursday candle close on Wednesday as well. We want to see this closing above 56,500. We have a 5-day did just open. Now, one thing I want to note about the 5-day is the 5-day did not play with the weekly in the same manner. So the 5-day is a very important time frame. The 5-day closed above 56,500, which means it has an inside bar in the range. So if it can maintain its next 5-day closure above 56,500, then we're looking at the possibility for it bouncing sooner rather than later. Obviously, we would see the etchings of that on those lower term timeframes like the daily or even the 4-hour, 6-hour, 12-hour as it relates to the daily. But in this case, if we see the next 5-day closure below 56.5, then we are looking for distribution. Most of the bounce is likely to result in lower highs or consolidations that get expansion down into distribution. Please do not be afraid of that word distribution. I'm not calling a bear market by any stretch of the imagination. That would be, a distribution into reaccumulation. And I'd be looking for something very similar to what I'm going to talk about in a little bit here that played out in 2019, minus what many refer to as the Black Swan event. But we will discuss this in just a moment. 5-day, we want to see this close in basically here and higher. Let's go ahead and throw on the bands as we starting to get into the higher term timeframes. We're starting to see expansion, but this was expansion into a zone of support for the 5-day. The 5-day absolutely has to close above, actually, not just 56,500. You can see the lower third standard deviation. If it closes below 56,500, basically losing this low wick structure, the lower third is right there at that trend line. It's basically $53,000, 53.5 or so. So we would at minimum be looking for a run of the current lower low structure on a wick basis, right? Because we actually do have a downtrend on the 5-day. This is a clear downtrend on the 5-day chart. So we have the higher high closes up here, the higher low, the lower high, and then the lower low structure, right? But it's still closing inside the higher low wick. And as long as it's doing that, that preserves the chance to just go into a consolidation sideways, maybe even pop up, take out the lower high and go on a run. But it is looking as though, if Bitcoin drops that wick low on a closing basis on the 5-day chart, we're looking to distribution 53 to 50, and then subsequently anything below there looking right around 45 to 48, right? So that is going to be very important to watch over the next 5-day period. This is closing with Saturday's candle, basically. So we will have a close on the 5-day on Saturday, and then, of course, the weekly on Sunday. And now as we go and move into the weekly time frame, well, the weekly closed on a lower low break. And technically speaking, this is the early goings of this week is a back test. Now, I am going to turn off the indicator here, the accumulation distribution indicator, for a moment, because I want to note that, Bitcoin did also close right on the lower second standard deviation. It did not close below, but on the close open, we saw further compression. So in my opinion, the only way I'm looking for lower into that distribution structure, into reaccumulation, before we start seeing like the actual run of the bull cycle. So thus far, we've just seen a run back to the prior all-time highs. We haven't seen the actual run of this bull cycle yet. So in this case, we need to see Bitcoin closing back above the lower second standard deviation. If it does close below the lower second standard deviation, this is going to start going into a range, thus preserving the opportunity to keep running some of those areas down below. But because this is still in a compressive phase, If Bitcoin closes back in the lower second, which is currently at 57,400 or so, and then especially, closing above, 58, um, 400 or so, we would be looking for this to possibly still go sideways, but not sideways and down in terms of its expansion. But flatten out a bit, giving Bitcoin the opportunity to head back up and test the highs again. And because we have the same kind of structure on the 5 day, we now have a downtrend on the weekly, not just on a wick basis, but on a closing basis. So we have closing high, higher low, lower high, lower low. Well, to break the downtrend on the weekly, what does Bitcoin need to do? It needs to close back above, the closing lower high here at minimum at 69,640, and then of course take out the wick highs there at around $72,000. That would break the weekly downtrend. And because we are seeing the compression on the Bollinger Bands, this is telling me that this is likely going to stay accumulation, meaning stay inside the range, maybe throw wicks outside of it at that 56,500 low, and then try for a trend break, go sideways for a little bit, and then try for a run later this summer into fall. Whereas if this closes by the end of the week down below, 57,300, and it flattens the bands out on the weekly, it's going to start opening up that distribution zone for the bears. So essentially right now you don't want to see Bitcoin closing in this danger zone. Anywhere below 58, 4 to 5 is realistically what I would want to see, because in a compression phase, you're going to see these bands even compress at the end of this week, provided Bitcoin does not close below the lower second. Like, you're going to see them compress a little bit and then flatten out somewhere around the 58, 4 to 5 must recover zone, splitting the danger zone here. Anywhere below there, it's going to start looking like, it wants to come down and tag that distribution zone. Now, I don't think it's over. Should Bitcoin tag that distribution zone? Now, I do want to throw on a swing indicator here. I don't like that one. We're gonna trace out the closing highs. We've had a downtrend to a trend break to a lower low. That was your fake out. But it's all about the closes. Let's go ahead and get this off of here, and we'll throw on. We'll do this. We'll zoom out a bit here and just show you the closes so that you understand the structure that's happening here. Here's the last higher low on a close. We're not doing swings. This is closing structure. So we've got, this swing high is the closing highs up here to the higher low to the lower high closing structure. You can pick either one of these that you'd like for the closes. We'll just take the swings, and then now we have closing lower low structure. So we do have, a downtrend intact. What do we need to see? Well, we need to see Bitcoin, basically come up, take out this high essentially, and then get on with its run, and then go into higher low fashion. There could be, I wouldn't want to see this on the weekly, but a lower high somewhere around here, and then try to higher low itself out, right? Higher low itself out from here, giving it a little bit more of a reasonable lower high structure, and really go into that deep into that compression that I was just showing you on the Bollinger Bands. That is a scenario that could play out. We'll see if Bitcoin can set a low in the next couple of weeks, right? Especially, we'll see what happens this week into next week, definitely. Whether it's going to be continuation or actually try to set a low, even though it is going to be a lower low, and then see where the potential is for Bitcoin to bounce to. Now, when getting into some of the longer time frames, one of the things that we got to be we actually should, before I get into the longer time frames, we should check up on the weekly momentum pivot right around the bearish control zone. Here is where it currently is. If it completely reversed from here and got above 67,550, that's where we would see this bounce off of the bearish control zone of momentum. In this case, it's looking to go into the bearish control zone. Let's see where the 5-day is. It's already in the bearish control zone, looking for continuation. There might be a little bit of a trend line. Not really. I don't like this. There's kind of like two trend lines, you could say here. You can do trend line regression on lows. I guess, it's close enough. there is a little bit of a trend line here. We got to extend this right to see where, that kind of comes in. Yeah, this means it would still have some room to go if it was actually going to hit that kind of a trend line. For a regular Stoke, I don't like Stoke RSI trend lines. RSI already has divergences that you can look at. There's not really, I wouldn't be looking for divergences here. It's more of like a trend line regression scenario for a regular Stoke. It only is really viable to look at that on a regular Stoke if you are going to do that. And I do suggest using like crypto optimized settings. There's a lot of guys in this space have come to the agreement that optimization for it is a 6314 255 look back. For those that know what that means, you'll understand that. For everyone else, don't worry about it. But it's one of those things of like, it's getting into the bearish control zone. Things like to hang out there. It's going to be, 4 days in there, 3 days in there. It's about getting that 2 day to continue to the upside here, which is going to be on closes above, in this case, 57, one night, 120 in this case, basically $57,000. Bitcoin's, trading slightly under there right now. But again, by Wednesday, if it is trading above there and trying to break out of the downtrend on the daily at 58.5, and then things are starting to look good. But let's go ahead and talk about what I do see occurring on the weekly. And we're going to get rid of indicators and support and resistance here. And we're just going to look at the chart on the weekly and talk about some of the longer term timeframes. Back in 2019, everybody called this a black swan. And I'm going to mark this chart up really quick for you and show you that it was not a black swan. In fact, you could have predicted that this was going to happen based on this high right here as it related to this downtrend. And I'm going to show you why. Much like what we have going on right now, we had the spike into the monthly all-time high. This was the monthly closing all-time high. So let's just reference this real quick so you have some context for it. In 2019, Bitcoin ran up to its prior cycle, top closing high on the monthly here. We can turn off extend right for right now, and I just deleted it. So let's try that again. Let's go ahead and pull that out, and then we're going to turn off extend right. So this was the monthly, right? So we're just going to label this. Hey, there's a text thing there now. I just noticed. Let's add text. Let's go monthly. Close high, right? And we can just go ahead and put that on the top. And then we'll go to the weekly. So after rejecting there on the weekly, let's reorient ourselves here on the chart. Weekly tagged the monthly close open high of the prior cycle. So it tagged the closing all-time high and rejected. Pretty typical stuff. We had an uptrend here. This was a consolidation, swing high to swing low. Yes, not really a high, or, it wasn't really a high put in. It was technically the high was right here. So put in the high on a downtrend break, broke all this downtrending high structure here. Put in a higher low and a close, came up, put in a nice higher high structure, higher low, equal highs with a lower low swing, or a higher lower high swing, sorry. Went sideways into a compression. You get the pattern guys drawing triangles all over this. When it broke down, where did it break down to? Broke down to this low side structure here, right? Well, what ended up happening is we had the closing highs were equal. We had the lower high in place. So once it broke down, we had lower low structure, and then we had a lower high close, lower lows to equal lows, and then it made a higher high. So it broke the downtrend technically. And this is where I do want you to be cognizant of how this is going to relate to the weeklies here. Because of the way things played out, and as I draw this monthly line out, you can see the weeklies, how that perfectly lines up with the break on the weeklies. But in this case, if we were going to take the higher low structure here, I actually would skip this. This is swing high to swing low. There is a closing low in here kind of in here. It's more of a continuation structure, but you've got this here is kind of how things went. And then you see that we were now downtrending. Even though it was holding support, the area to look at was this low right here. This was your range. It came back down to tag that area. And let's see if I can get this corrected. We had lower high structure here. And then we had a downtrend. So we had this downtrend on a closing basis. This downtrend continued, and when it bounced, it did make higher high closes. And but what it did not do is it did not breach this very important high wick on a closing basis. So although we had in place a structural break on a closing basis, we needed to see the wick high closed above, or else we were looking right back to this low and lower. This would have been seen as a deviation, and then we're looking lower on down the line to the various supports. So obviously when this high was put in, it was like, okay, we need to see higher, lower, equal low structure here. So what does Bitcoin have to do? It has to hold essentially this zone at the lows. We'll call this out with some horizontals here because this is pretty important. And we'll go with yellow. We needed to basically see it hold this structure here because this was the lower low swing. We have the downtrend. Anything below here is continuation. So this zone is what needed to have been held. We were already in a downtrend. We had the rejection. The close in late February did that. And then, follow through in the end of February into March. We were identifying this area as the area of support. Must hold was the zone between 65.26 and basically 7K. Now, the reason that I bring this up is because we're going to relate this to what's going on in price action right now. Talking and trying to find my drawing tools here is not working out very well. But I want you to see one of the main reasons why, if this area broke down, we were looking to retest the other structures down here, and then in order, this was an order block on higher term time frames, and then the high side of the lows. Now, when flipping this to a daily, oh boy, flipping this to a daily, it got very interesting. After putting in the lower high structure, the downtrend, we had the uptrend to a downtrend on the daily. It tried to hold the high side of those weeklies. So this was the high side of the weeklies and then the danger zone down below. What happened when it breached through the danger zone? Well, it breached through this entire structure all in one shot. This was an exacerbated move. Obviously, the reason why the move was exacerbated is because of the event that took place with the announcement of the shutdowns and stuff like that. But this was not out of character, and it was not what I would consider a black swan. We had plenty of time, and the weekly was showing us well beforehand what was going to occur. Now, what was exacerbated about that wasn't the fact that it was some kind of a black swan, but it was what exacerbated the move down was the news, right? That it just lent more fuel to the news, shot through these supports, and technically did what? It landed right on the high side of the actual bear market lows. Now, of course, this is not what I'm looking for here. For instance, I'm not looking for this to enter a weekly downtrend and then come and run our current bear market lows. So what I want to point out, though, is that because we have a weekly downtrend, what we need to see on this weekly, and I'm just going to draw out the local structure here. And forgive me, for those of you that might already know this stuff, understand that there is a lot of people that are coming to me now and checking out my analysis that don't really know much about technical analysis. So I want to make sure that they understand this stuff. So please bear with me if you do understand this stuff. And if not, or even if you do, it might be a good refresher. So when I say the weekly is downtrending now, it's not just downtrending on the swings or the wicks, it's downtrending on the closes. This is going to be a lower low close, even if this is the low. What it needs to happen now to avoid coming down to the next big areas of support, whether it's the order block over here on the weekly, which is the first target zone between 53 and $50,000 on the wick. So this weekly order block, next area would be, right around the $50,000. I have this wick marked as part of that zone for a swing or wick catch. But closing inside of this order block, fair game for at least the first area of daily distribution. Next area would be this. But even if it bounced, what does it have to do? It has to close above. Now, this particular high right now to actually get a legit break. So for instance, we could see the weeklies come up and even close inside of the wicks here, make higher high structure, means absolutely nothing on the weekly from my point of view and from the trend's point of view in terms of the ability for price to push up. If it starts putting in a high here, I would actually be very, very cautious. So beware of this particular structure if we do see something like that. Now, I would not be looking for like an exacerbated move down, but you can see by some of the news in the market right now regarding Germany and Mt. Gox, how there could be a setup for an exacerbated move if we did see one. We should not be surprised, and you would likely see people calling it a black swan event. No one could have predicted that they were going to do this, and it's like, no, we've been talking about it for months and weeks, if not, weeks, if not months, I should say. But in this case, that's where I would be looking for target 2 of distribution. And if it did shoot through there, I wouldn't be looking for much more than, this structure over here, somewhere around the mid 40s, maybe at worst low 40s. I kind of highly doubt it, and I'm going to show you why in just a moment. By moving back over to something that we talked about last week quite a bit, and that is the actual structure here for the miner price. And miner price is currently, Bitcoin's trading below it. We're in a capitulation phase for the miners. They're underwater. Miner price is the black line, not actual price here at 58,500 or so right now. Price at it's about the same as what it was. This last updated at 56,650, but the floor for electrical cost is at $46,000. Why do I bring this up? In the quote unquote black swan event, what happened with price and actual miner costs, it crashed into the electrical cost. So understand that I'm not looking too much further down than the mid to upper 40s, so $45,000, $48,000 at that target 2 of distribution. You'll likely hear bull market over, bears 1, see you next cycle. We're already seeing some of that. I'm not of the opinion that that's valid and by any stretch of the imagination right now. So that is what I'm going to leave you with today. This is a longer video, of course, because it is a Macro Mondays video, and I wanted to talk about a lot of extra stuff. I do want your feedback. I also want to note that I misspoke on, it doesn't matter now because the lower high to beat has changed for the daily. But I misspoke on Friday's video, and I meant to say 63,800, and I kept calling it 60,800 at this particular lower high. Just understand that, the lower high in the daily, the price that you want to see the daily start closing above is now this lower high in the must recover zone at 58.4 to 58.5. So I hope you all had a wonderful weekend. Hopefully this week we'll see some. We'll see if Bitcoin can maybe try to dig itself out, save itself here. Otherwise, it will be the lows and lower. 56,500 is going to be the pivot. So keep an eye out for that when it starts getting into the daily closes. And then we'll come back to it and reevaluate where price is on Wednesday. I hope you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. And with all of that said, Landy out.